Hi, thanks for joining us here at Tax Talk UK. We're going to look at income tax. Before we do, if I could please ask you to take a moment to subscribe to our YouTube channel and turn on the notifications. That way, you'll easily be able to refer back to this information if you need to, as well as finding other information that we have available and to be notified of new information as we upload it. Thank you. So back on to income tax. As the name suggests, income tax is the tax that you pay on your income. You do not have to pay tax on all types of income, and you will often hear the phrase taxable income. Is that income taxable? Typically taxable income, so income that you must pay income tax on, is the money that you earn from your employment, if you're employed, and any benefits that your employer gives you too. If you're self-employed, either as a sole trader or as a partnership, you will have to pay income tax on your profits. Most pensions are taxable, including the state pension, any company pensions, personal pensions, and retirement annuities. Income that you earn from renting out a property. Some state benefits are taxable income, but not all benefits you have to pay income tax on. You have to pay tax on interest from savings accounts, anything you earn over your savings allowance, and income from dividends, again, anything over your dividend allowance. Income from a trust is taxable income. More recently, some sole traders and partnerships have had grants relating to coronavirus, and these are liable to income tax. If you receive income from overseas, some income from overseas will be taxable. So if you do receive income from overseas, known as foreign income on your tax return, then you should check whether that is taxable. As I mentioned earlier, not all income is subject to income tax. And some of the income that's not liable for income tax, so not taxable income, such as if you're self-employed or earn income from renting out a property and you earn less than £1,000 a year in turnover, then you don't have to pay tax on that. If you have a tax exempt account, such as some national savings bonds or ISAs, then those are exempt from tax, as well as premium bond wins or national lottery wins, which also are not liable for tax. As I mentioned earlier, some state benefits are taxable, but not all. So some state benefits are not liable for income tax. And what I would suggest is if you receive state benefit, then you check whether it is subject to tax or not. If you rent a room in your house to a lodger, you have a rent a room limit, and if the income is below that, then this won't be subject to income tax. So these are just some of the examples. If you're not sure whether your income is subject to tax or not, then you should always check. And if you can't be certain or you're not sure, then I would suggest that you get some professional advice just to be certain. In terms of paying your income tax and how that is payment is made to HMRC, if you are employed, this will be deducted from your employer before you receive your payment. So you'll just receive your net payment, which is the payment after tax. This is known as your tax being deducted at source, and is through the pay as you earn scheme, often shortened to PAYE. If you have other sources of income, maybe from self-employment or as a landlord, or if your tax affairs are more complex or you have several streams of income, then you may pay your tax through the self-assessment scheme. So the self-assessment scheme involves on an annual basis you submitting your tax return to HMRC, and from that will be declared all of your different income, including employed income or any other income where your tax has been deducted at source, and then your total liability for the year will be calculated, and anything, if you have had any tax deducted at source, that will be deducted from the liability to give the final liability that's still outstanding and due to be paid. So it should be noted that the PAYE scheme and the self-assessment scheme are entirely separate systems. They both have entirely separate systems and technical running within HMRC. So sometimes it is possible to move liability from one to another. For example, if you are employed and have some other income that you need to declare on a self-assessment tax return, you can, if it's below a certain threshold, request that that liability is collected for your tax code. But the two different systems aren't actually connected in any robust way within HMRC. So it's important to actually keep a track for yourself of what your liability is, and if you've asked for it to be transferred to a different system, that you monitor that and you remember and keep a record of the amounts. Most people in the UK have an amount of income that they can earn before they have to pay tax, and this is known as the personal allowance. Now, if you claim the marriage allowance from your spouse, if they don't utilise all of their allowance, yours may be slightly higher than average. And if you earn over a certain threshold, which is currently £100,000 a year, then it may be smaller. And there are other things that may affect your tax allowance. This just refers to your average person. So if you need any help to know whether your tax code is correct, then there's lots of guidance available on HMRC website. If you're still not certain, then we would advise that you take professional advice to be sure that your tax code is correct and that your tax is deducted correctly through the year, and that you don't get a big shock at the end of the year by finding that you've under or overpaid your tax if you are employed or you have your tax deducted at source. Some people may also qualify for some tax reliefs, which means that they'll pay less to compensate for things that they've had to spend money on, things such as job expenses, so things that you pay for your work but you're not reimbursed from your employer for. And also, if you're due tax relief, for example, if you're a high rate tax earner and paying into a private pension, you may be eligible for extra relief. And you should always make sure, if you're employed or you have your tax deducted at source, that for that source of income, if there's anything such as any reliefs or job expenses that you're entitled to, that you make sure that HMRC know, so that these are correctly applied to your tax code, which is how you actually get the benefit. Some people may also be liable for some special charges, such as the high income child benefit charge, if you receive child benefit and you earn over the threshold for that. Again, if that applies to you, it's important that HMRC know things like private pension contributions, any gift aid that you give, any job expenses, to make sure that you do only pay that charge on the correct amount and the threshold is set correctly. So as I mentioned earlier, if you complete a self-assessment tax return, you will put the income from all sources, even if it's been taxed. All of your income must go onto your tax return, and then your total income will be assessed against your allowances, any charges that are applicable, any benefits that you're allowable for. and then your total tax liability will be calculated for the year, and then also an adjustment will be made if anything, any income tax has been deducted at source. This will be reduce the liability, and what is left will give you your total liability that you need to still pay for the year. And of course, there are some instances where somebody may have paid more tax, have more tax deducted at source than their liability. And in that instance, HMRC will repay you any overpayment. So a common one would be builders and CIS subcontractors who have CIS deducted at source, which is just a flat rate, and we go into that in more depth in another video. But also, if you haven't used all of your personal allowance, but that has all of your tax code was allowed for that through your employment, and you've had perhaps some employment or some income deducted at source and some self-employment. So, but the important thing to remember is you can't get tax refunded that you haven't paid. So if you haven't paid any tax, you won't get anything refunded, because there is nothing to refund. So there are different rates of income tax, and the rate that applies to you will be determined by your total income and also the tax band that's applicable to you. So currently, for example, if you can earn up to £12,570, this is in the 2021 tax year, and that is your personal allowance, so that will not be subject to income tax. And then you can then earn up to £50,270, on which you'll pay 20% income tax, and above that you will pay 40% income tax, up to an income of 150,000, where above that you'll pay 45%. So as I mentioned before, some of the bands and thresholds may be changed due to your personal circumstances. And if you're employed and you pay through the PAYE scheme, you will receive a tax code notice from HMRC that shows how your tax code has been calculated, if it's not standard. And you should also know if there's any benefits or charges that haven't been taken into account. You should notify HMRC of those straight away. If you're a sole trader, for example, and you don't have an income that's deducted, that has tax deducted at source, then that will all be paid on your self-assessment tax return. And just to mention that when the tax year ends on the 5th of April, and you have until the 31st of January the following year currently to submit your personal tax return, but that time also is the time that the liability is due to be paid. So it makes sense to get your tax return done, not necessarily straight away at the end of the tax year, because you may be waiting for documents. You want to make sure that everything's included, especially if you're self-employed and you have purchase invoices to come in. You don't want to miss those off by being too hasty. So sort of 2 to 3 months within the tax year, you should be thinking about getting your tax return submitted, and that will give you a good amount of time to know what your liability is going to be for the that's going to be due to be paid by the end of January. If you leave your tax return till January, then you don't give yourself any amount of time if you've got any surprises in your liability that's due. So that can be particularly important as you start, because you won't have established, you won't really know what your tax liability is, what you expect it to be, because you don't know what you expect your income to be until you've got a little bit of trade established to know that. So a really basic overview on income tax. I hope that's helped. In the description, I'm going to put the link to find more about income tax on gov.uk. So if you've got any special circumstances, or if I've mentioned something that you think may apply to you and you want to find out more about it, HMRC also do have their own helpline that you can call for individual advice, and that is open Monday to Friday, 8 till 6. It can get very busy, so leave yourself plenty of time, because that can be frustrating if you don't leave yourself very much time and you're left on hold trying to get through. And generally on the HMRC website, they keep updated with the best times to call, which generally, in my experience, is the earlier the better. So they open at 8 o'clock, and generally they seem to get more and more busy as the day goes on. So just to sort of pre-warn you if you do need to call on that. But as I mentioned, there is a lot of information available on gov.uk, and we've also got some more specific information on various elements and aspects that may affect your income tax in our guidance. Well, I hope that this has been helpful, and thank you very much for watching. And as I mentioned earlier, if I can remind you, please, if you haven't already, please do subscribe to our channel and turn on the notifications. Thank you very much. Goodbye.